Welcome back. You're watching The Money Show with me, Kavita Thapliyal. Now, for you to get the right fund for your portfolio, it's imperative for you to know the fund manager and their strategies, which is why we get you Meet Your Fund Manager segment. And the fund in focus today is Edelweiss US Technology Equity Fund of Fund. And to discuss more on this, I have with me Niranjan Avasthi, SVP and Head of Product Marketing and Digital Edelweiss Mutual Fund. Niranjan, good evening and welcome to the show. And let's focus on the US market first. We'll talk about the tech space and tech stocks later on and more in detail about the fund. But then let's talk about how well is a US market placed considering all the concerning factors.
Hi, Kavita. Thanks for having me. So broadly, if you see US market over the last 1 year was grappling with, high inflation, and due to which we have seen US Fed increasing rates at a, more than precedent rate till almost more than 5%. And this broadly, you can say, successfully managed to bring down inflation. So as we speak today, of course, the economic growth of the US economy has been subdued over the past couple of quarters and is expected to remain so given inflation is still very high, well above the Fed's target, and there is no stimulus to the economy because Fed is on a rate rising spree. However, in pockets, whether we talk about unemployment numbers, which are very low, overall consumer spending has been gradually improving over the past 1.5 year. The housing market is quite stable now. So in pockets, I think so things are looking better. However, overall, if you see, the economy is still slow and much below, or I would say firing much below its expected.
All right, now talking about specifically having exposure in the US market, diversification is always a great strategy, but then for one to diversify towards international market, you need to make sure that your core portfolio is sorted and you are an investor who's ready for an international diversification. Talking about diversification towards specifically US market, you think that is something that one must consider if at all you're looking at international markets, or along with this, you can also club it with different economies?
So US is the world's largest economy, and if you are investing in equity, you can't ignore a market which has more than 40-50% weight to the overall market cap in the world. But the expectation while such diversification has to be right and correct. Over long run, we all know India would do well. Returns will be made in India as well because it's growing much faster than many other developed economies. But when it comes to diversification, if you're looking beyond India, one cannot ignore US. US is a superpower, a largest market. Specifically, there are businesses or sectors which are not present at that scale in any other country apart from US. If you talk about technology, if we talk about many other innovative healthcare businesses which are there in US. So many of these businesses, if you want to buy, you have to go to US market as a part of your diversification strategy.
All right, talking about your US technology fund, it's basically a fund of funds. So let's break this down, Niranjan, and let's first talk about what exactly is a fund of fund.
So fund of fund is simply a fund which in turn invest in an underlying fund. So when we talk about Edelweiss US Technology Fund, it's a fund of fund which invests into an underlying fund, that is JP Morgan US Technology Fund, which essentially invests in technology companies in US, or companies which are listed in US markets.
So, Niranjan, talking specifically about the tech space right now, this is one space in the US market that's always very buzzing, and, investors who are already investing and who are also looking at the US market are usually bullish when it comes to the tech space, okay? And not to forget, this tech space really gives you a lot of triggers and cues for the rest of the world markets also, the way they might just behave in a particular day or in a season. But how exciting this particular tech space is for you and for this particular fund? What's the kind of exposure we are talking about? What are the technicals in terms of exposures, if you could also elaborate on that?
Sure. So talking about technology as a theme, technology as a theme is one of the most dynamic themes over the last couple of decades. We've seen technology changing hands right from industrialization to electricity, electrification of economies to internet to now we all talking about AI, which is generative AI. So in each decade, every decade there is a change in phase of technology, and this fund essentially tries to capture these change, the mega trends within the technology sectors, and try to create a portfolio and that generate commensurate returns in this specific theme. So US, when we talk about US is a giant when it comes to technology. If you look at the overall technology index of MSCI Tech Index across the world, 80%, more than 85% exposure comes from US tech stock. So they are huge, they are giants, and they are not only into one specific field, but they are all over. So when we talk about maybe AI, it's a US company. When we talk about internet giants, it's US companies, e-commerce, digital, be it digital streaming, be it electrification of cars, semiconductors. Most of these companies in each of these sectors, large companies are from US. So technology is huge, and US has a large share. Now, within that, if someone wants to invest, this is a fund which Edelweiss US Tech Fund, which in turns invest in JP Morgan US Tech Fund, essentially, as I mentioned, captures these trends and it invests into technology companies. Currently, if you see over the last couple of months, we have been talking about generative AI. In fact, the number of people adapting the open AI system when it was launched, within a matter of a month, more than 1 billion people signed up. In fact, just 5 days. So the adoption rate for AI is very, very high. Similarly, adoption for many other technologies, be it cloud computing, is very, very high. When we talk about these kind of businesses, it all boils down to technology companies. So there are companies which are into hardware, which are into semiconductor, which are into internet businesses, cloud computing, which will all take these themes and generate returns for the investors. This fund essentially identifies these kind of businesses which are into mega trends, where the adoption by consumers of these technology is growing, and there is huge potential for such adoption, and it invests into these kind of companies. If you see over the last couple of years, technology has one of the highest share in terms of earnings in the US market. The share of earnings by technology company is more than 50% in the overall US market. And even if you see in the overall world, the share of technology in terms of returns and earnings is very, very high. So this fund actually helps investors to capture that space and ride this theme over the next couple of years and decades to go.
All right, Niranjan, now looking at this particular space, okay, this is a sector-oriented fund. Even though you have international tech companies in it, an Indian investor who might be having exposure to tech already, maybe through large cap or mid cap or maybe through a tech fund also. That kind of investor who's already invested in technology sector in India, do you think for diversification, such a thematic fund makes sense to their portfolio?
Sure. So there are two things to it. One is the technology that we talk about in India is very different when we talk about technology in US. In India, the technology is largely IT services, be it product services or software services, and when we talk about technology in US, it is more to do with semiconductors, hardware, internet companies, also technology not only in software or internet, but also technology in medical space like biotechnology. It also includes, companies like Tesla, for example, which is part of the portfolio and not a recommendation, which is changing the way we drive cars, the way we all travel. So technology is a very, very broad theme. While in India, when we talk about technology, it is only confined to software or IT companies. But when we talk about US tech, it's very, very diversified. You will have technology-led companies from entertainment, from automobiles, from technology, which is IT sector, and healthcare and biotechnology. And hence, this diversification is quite different. And even if someone is invested in IT sector in India, this exposure is warranted because it adds a very different flavor to your portfolio.
All right. Last question on this fund, and we will wrap up the discussion. What is the tax treatment that an investor should know about?
Right. So, there has been a recent change in taxation as far as fund of funds are concerned. We all remember, there was a change in taxation for debt funds in India. So the taxation as of now is marginal tax rate for whatever gains you make in this fund, which is an FoF. The taxation will be as per your marginal tax rate. However, I think so, there are expectations that the taxation will be made in line with, the other equity, which is giving you indexation benefit when you invest overseas in India, overseas from India into maybe US stock, any other international stock. But as of now, the taxation is at the marginal rate. So one should be aware about this.
All right, Niranjan, thank you so much for being on the show and helping our viewers with all the nitty-gritties related to this particular fund. Thank you.
Thank you.